Hey, so we looked at Nvidia not too long ago, just a couple days. When we last checked, it was trading at 432. Uh, End of today is 471. Now, all of a sudden, after hours, it looks like it's over 500. So their quarter two earnings did come out today, so we're definitely going to look at that. We'll look at first just what we expected to see. Then we'll go into earnings, look at the guidance going into Q3. Uh, there was a little bit of news in between just the past couple of days, so we'll look at that. And then we'll go into the technical analysis just to see what's a good time to pick this one up, especially with all the price movements. So let's just look into what were we expecting. So right down here, they told us that they were looking to get 11 billion in revenue while keeping their gross margins at around 68 to 70%. And then here we have like analyst reports just kind of over the past month. It might be a little small, but originally it started off with revenue expectations in around $10 billion. Guidance told us 11, so they revised it. It slowly was ticking up until we got to today. Even today, while we were waiting for earnings to come out, it was still steadily increasing a little bit, ultimately ending up at 11.2 billion. And this is what we got: 13.5 billion. They told us 11, they gave us 13.5. It's incredible, I'll say that. Gross margins at 70, they actually gave us 71%. I mean, I guess I was kind of I could imagine they would beat the revenue, but to beat the revenue and the margins, that's just very impressive. So down here below, we're looking at the non-GAAP just because with the non-GAAP they're able to pull out some of the expenses that aren't actually like cash type expenses. And so year over year, over 100% growth. I mean, that's still very good. But then the quarter over quarter up 88%. That's just incredible. So they went from roughly 7.1, 7.2 billion, nearly doubled it. Gross margins through the roof. Operating expenses, those were kept very flat, which is a good thing in this case. Operating income doubled due to that revenue growth. And then the earnings per share coming in at 270. Analysts were expecting around 2.1. They gave us 2.7. So just phenomenal on the front lines. Let's kind of dig into the revenue. And so their big thing, I mean, AI, and that's what data center is kind of involving, is AI. And that was the big pop. It went from 4.2 all the way up to 10.3. Uh, yeah, it was relatively flat, just steady growth, and then all of a sudden, here's the boom. And the thing is, that's probably going to continue to grow. Uh, Not sure if we'll see this type of growth, going forward. I'm sure it will kind of flatten out, I mean, but to go 88% growth in a quarter, I'm not sure if we'll see that type. Year over year, yeah, I do think that 100% will kind of continue, but eventually it's going to kind of flatten out while still just growing a little bit. But still, let's just focus on now. Phenomenal. Just everything pretty much ticked up. If we look at gaming, it went up a little bit. Professional visualization went up. Auto actually went down, so kind of surprised by that. I guess they haven't made a lot of deals within the auto segment. But yeah, data center, that's the big drive here. Moving on, we have, again, just another look. This is their consolidated income statement. Again, it's just so surprising that they were able to double revenue um, from last year, and the cost of the revenue is, yes, there's a little tick up of 300 million, but to tack on nearly $7 billion in revenue and only at $300 million cost. I mean, that's just incredible. And then we have the 6 month here, again, showing that growth while also keeping cost of revenues down. And then a continuation of that, the operating expenses, again, staying relatively flat. So it's not like they got these sales by adding to their sales team or doing a bunch of research. That's all kind of been just building up over time, and now it's just popping. So it's just incredible. So moving on to the balance sheet, not too much here. Of course, the headline is the current assets versus the current liabilities. So current assets is close to 29 billion versus current liabilities at 10. Uh, they have tons of cash at $16 billion. They have enough cash to cover all the current liabilities. Um, but most of the current stuff kind of had a big change. Of course, cash went up a decent amount due to all the revenue. Accounts receivable went up because clearly all these orders, and now most orders I assume will have terms of maybe net 30, net 60, something like that. Inventories went down, so clearly the sales are picking up, and now they're trying to keep up, it seems like. Prepaid, that's really just a timing thing, but that went up. Deferred income taxes down in the bottom section of the assets, that popped, that just means they paid their taxes in advance. Other assets, not sure what that's made up, but there was a little growth there of about 700 million. And then on the liability side, we're seeing accounts payable went up a decent jump, but uh, again, just probably a timing thing. Same with accrued and other current liabilities. That's just a timing thing, most likely there as well. And then shareholders' equity, again, due to the income, that's why we're seeing that pop. In terms of the cash flow, so the cash from operations phenomenal, especially compared to the 3 months compared to last year. But that's really just driven from that net income. They made so much that it just trickled down through this. It looks like they spent in accounts receivable, but they're saving in. They haven't. They didn't pay their accrued liabilities yet. So uh, those are the big jumps that I saw. Otherwise, relatively flat compared to the 3 quarters from a year ago, with those couple exceptions. And then, of course, the overwhelming net income, just 10 times what it was in the same 3 months last year, that it just came all the way down pretty much. In terms of the investments, it looks like just their personal investments, they didn't potentially sell as much. That's why it went from 5 down to about 2.5 in terms of cash they received. And still purchased a lot, but not as many securities as compared to last year. Uh, and that kind of rings true even for the 6 months. Big drops, relatively speaking, kind of lines up there. And then in terms of financing, repayment of debt, so a lot of companies took out debt. It looks like now they're having to pay it back. And then payments related to repurchases of common stock. So we're going to mention a piece of that when we get to the news, but as you can tell, they're picking up more stock, and they intend to pick up even more. So here we go with what we're expecting to see from them. I think that's where we should start. So another huge growth. They're expecting $16 billion in revenue, with now gross margins even higher, close to like 72. They were about 71. They're thinking it's going to go up even more. Operating expenses, $2 billion. Non-operating other income, minor thing, but just want to see how accurate they are. Tax rates look to be low. I remember just off the top of my head looking at Amazon, I think Microsoft. Uh, Most of them are in that range, but I believe it was maybe Microsoft, or there was one that stood out at something like 19%. So to see 14.5, that lets us know that's good. They should save money, at least compared to that one company. But it seems like that's kind of the growing rate. So probably that other company's just overpaying. But here's that stock. I mentioned it earlier. This is what I was referring to. They're planning on buying back 25 billion shares. I didn't see when, like, how much time they're going to give themselves. I mean, clearly it's not going to be right now in this quarter. Maybe they'll buy, 300 million this quarter, and I didn't see a time frame of when they're hoping to buy all those, but that's kind of good. because that means that should keep the price elevated because there's going to be less supply. But of course, it'll depend on when they actually follow through and purchase those. Analysts expect revenue from Nvidia's data center to expand to as much as 40 billion in 2025. That's what other estimates are saying. So that's pretty much makes sense. I don't know if they're talking about per quarter, but they put up $10 billion in this quarter for data center. So if you just times that by four, I think they're already there. So just pointing that out. But yeah, here we go. So looking at next quarter, so the middle column here, uh, revenue, they were saying 12.6. So this is obviously going to get way updated. But yeah, that just shows how well they're doing compared to what just everyone was expecting. Just huge report here. Uh, and so now we can pivot into the news. Again, not much, but just a couple things I saw while I was looking. So I guess we'll start on the left side here. So the supply chain shortage delays the tech sector AI bonanza. That's what they're saying. Um, and this is, I'm not sure if we've mentioned it, but clearly Nvidia can do more sales than it's currently doing. Uh, but this is the reason why it's kind of being held up, even though it seems like it's like tremendous growth or growth here. It's actually being held up. Like it could be even greater, but here's kind of the issue. Um, there's plans to at least triple production of its top H100 AI processor, according to three people close to Nvidia, with shipments of between 1.5 million and 2 million in 2024, representing a massive jump from the 500,000 expected this year. I believe the H100 just came out last quarter. Correct me if I'm wrong on that, but I mean, so that kind of gives them one quarter off, but still tripling. They're tripling it from this year to next year. That will be uh, just very excited to see the revenue. But yeah, so they're talking about here how TSM, another stock we followed, they predicted last month that the demand for AI server chips would grow by almost 50% annually for the next 5 years. So they are working on this. So down here at the bottom, it mentions TSM plans to double its capacity of CoWoS, which is an advanced packaging technology needed to make NVIDIA's processor, but warned the bottleneck would not be resolved until at least the end of 2024. And that's when potentially we'll see this massive growth growing from 500,000 units all the way up to potentially 2 million. Wow. Uh, and then the last piece of news, NVIDIA had a new deal with VMware. It's a new strategic partnership. Um, Potentially, I mean, VMware, I believe they have hundreds of thousands of customers, potentially millions. So this is a very big deal. It's whatever NVIDIA is able to help VMware with, it's going to expand out to a pretty large customer base. So this is, of course, a nice deal again. And then as we pivot into the technical analysis, uh, down here at the bottom, that's kind of what we last saw. That's how we saw this stock. It was trading at 432. We had buy points pretty close to that. 418 is the one we were monitoring. That's what we wanted. Obviously, seeing the results of today, uh, I mean, it's over 500 now, so it would be crazy of me not to say we should have picked it up at 432, but we were playing it safe. We didn't know what was going to happen, but yeah, we were looking for 418 with resistance. We actually have resistance at 503, so now we're at that point. We'll see how it reacts now that it's actually there. Uh, and then the note that we left ourselves was it was in this uptrend since January, and that the accelerated uptrend uh, happened in the end of May 2023 after Q1 earnings and Q2 guidance, and that we were going to buy the dips. We also noted that the accelerated uptrend broke, but obviously when we get into that, I'm guessing we're going to see that that's not the case anymore. So uh, this just shows the end of day. And so right now it's at 470. Uh, it's kind of small, but up here in the corner, it shows that in the after hours, it's up another $31. So we can just tack on roughly $30 to get us to roughly 500, which happens to be the top of the uptrend. So no real changes in terms of, updating lines. Let me just snap this back on. Yeah, this is that uptrend that we picked up in January. Here's this May, the note that we mentioned about May, how it kind of took a step up after earnings. Here we are again, kind of in the uptrend. It did pull back. Fortunately for us, we did catch this one, so we did buy some. Not at the very bottom, but like at 410 or something. And since then, it's gone straight up. So it's back in the upper half. We'll see if it slows down, because at least based on our side, it's going to peak. Come tomorrow morning, it's going to be at the peak. Chances are people are going to continue to pile in. I have no idea when it will stop. We'll continue to watch it though. We'll just see. But again, we're just going to play it as we see it right now. So without even factoring in the extra $30, just looking at it right now at this price, at least technically speaking, and that's what we're going to roll with for now. At 471, I would say it's fair value. It's right in between that uptrend. It kind of sounds ridiculous even saying it, because I can only imagine how high this one's going to go. But again, just technically speaking, right now, it's in the middle of that uptrend. It's actually above the blue line. That's why we don't necessarily like the price now, because like right now, my buy points for this are 424, which is this light green line here. There was a little bit of support not too long ago. And obviously, if it pulled back to that point, yes, I would pick it up. We also are going to mark 463. That happens to be the midpoint for this week. Obviously, that's not, I mean, at least I can't even imagine it pulling back to that point this week. But again, that's kind of the mark. So just going forward, it'll just gradually increase to 470, 480. But we'll just keep tracking it. And if we can pick it up at a point like that, that's when I'll probably add on to this. Resistance, we had it at 469 and 500, 500 being the top. Again, it's already past that, so I wouldn't expect it to go too much higher, but on such good news, this one might take another step up, just like it did back here in May when it did Q1. It might have now a third step up, and we might need to start tracking it like with a fourth level. But of course, we'll see. We'll just continue to watch it. But otherwise, yeah, the note's going to be kept the same. I don't want to add in the extra step until we see it, but just a quick wrap up. So this is how we're seeing it now. Nvidia 471, buy point at 424, 463, but 424 would be the ideal. Resistance at 469 and then 500. So we'll see how much that gets tested. Very, very likely we could see a step up. And then the note, in an uptrend since January, that accelerated uptrend at the end of May after Q1 and Q2 guidance, it did break, but clearly it popped right back up. So we will keep it that way and buy the dips. That's the current strategy. But that's it. So if you have any questions, feel free to ask. Or if you want to leave a comment, great. Otherwise, please like, subscribe, and I'll see you on the next one.